Good afternoon, everybody. Welcome to Trader Merlin Show for your trading week wrap-up, your Friday edition. Hope you had a great week out there. Very interesting one, that's for sure. Seeing the rollover, the boom, the bust cycles of our equity markets, the joy of trading. Before I jump out, shout out to my good friend Kerry. He sent me this bottle of Jefferson's Ocean for my birthday, and I don't know if you guys know, but like this bottle has probably traveled more around the world than most people in existence. I mean, this thing spent, I think, 5 to 10 months at sea and stopped at like 20 different ports around the world. Pretty cool. Anyway, cheers to everybody. Happy Friday. I'm looking forward to a great weekend. Been a great trading week, even though we had a little bit of a pullback in the crypto markets. Still looking great. Of course, we'll talk about that here shortly. So I cannot wait. Let's do this. As you see, oh man, it's so different too. It is a completely different taste. I think something about the being at sea and the salt water in the air, whatever, just has a different impact on the flavor of Jefferson's Ocean. So today's graphic, in case you didn't notice, Iron Mike Tyson, a representative of my childhood, a representative of my youth. I love Mike Tyson, man. I think he represented a lot of different things. Certainly the indestructibleness of Mike Tyson, but how somebody with so little can achieve so much and just raw determination, fight, rage. Today he gets to fight a punk kid who's a YouTuber who doesn't really fight anybody that's current. He fights old wannabes. And I'm probably, with a lot of other people here, just wishing that Mike Tyson comes in there as a 58 years old, fighting a 27-year-old kid. So he's got, 31 years on the guy. I hope he knocks him out. Absolutely, I'm watching the fight, Oliver. I would love to see Iron Mike come out like he did when he was in his teens, guard up, come in like a tank, and just uppercut. He does that double body hook and then an uppercut. Just one of those. Bye-bye, Jake Paul. Can't wait, looking forward to it. Even though the money line is on Jake Paul to win this fight, I just don't like cocky, arrogance, pompous people like that. It really kind of bugs me. So, yeah, I'm looking forward to Jake Paul getting knocked out cold. I want to see him on his back on the mat, just medical staff around him. Come on, just shut that kid up. Anyway, let's move on from hostile and aggression and move on to our markets, which had a lack of hostility this week. Kind of an interesting one, and I will do my best to keep it exciting as we go. Tyson wasn't the fighter that bit someone to ear up. Yep, he did. He was so caught in that fight against Evander Holyfield. He was just so caught up in this rage mode. Tyson admits it. He says when he goes into rage mode, he doesn't like it. He doesn't want to be around it. It's a dangerous thing to be. And if you watch his younger fights, man, he is an absolute monster. And it's just he got into a rage mode and bit the guy's ear. He bit the chunk out of Evander Holyfield's right ear when they were in a clinch. But yeah, that was the guy. It's a good one. What'd you say, Big Eb? Well, travel that thing down. That thing down to say, there we go. Maybe, Big Eb. I still owe you a beer. Come on. All right, let me start off with the first piece. We've talked about valuations, and I mentioned that I think that SpaceX, if it finally does do their IPO, will probably be one of the biggest initial value IPOs in history, right? Ever. Well, conveniently enough, I don't know if you guys saw the news today, but SpaceX is selling off some of the shares, which give it a valuation of $250 billion. I believe, if I'm not mistaken, I think that Alibaba was one of the most valued IPOs in the United States. I could look. I think it was like $160 billion. That would put this on track to be the most valuable IPO. They sold shares at $135 per share. And, what does it mean to me? Well, I'm a little bit surprised, to be honest, that they're actually selling shares. Because if you look at the situation that we got going on right now, you have Elon Musk, who's cozied up to Donald Trump, getting himself a nice little political office of the Department of Government Efficiency. Pretty sure that there's going to be a lot of, preferential treatment towards SpaceX and their space exploration efforts. So if I'm Elon Musk, I don't know if I actually want to sell any shares of SpaceX, because it could be far greater than $250 billion valuation when all the dust settles and the ink dries on this deal. But it was done today. Again, some shares sold, I think $135 a share, putting the valuation of SpaceX at $250 billion. We talked about what it would take and who would be the first trillionaire. And there was some really good feedback from you guys. Certainly Putin could be on that list. No one will ever know because his numbers are not disclosed. Same thing with the king of Saudi Arabia or whomever that may be. Don't know exactly how much money they have either. It's leaning much more towards Elon Musk, in particular because of his Tesla holdings and with SpaceX and other business ventures. Somebody mentioned here it could be Jensen Huang, who is the guy from, there is no ticker yet, Big Eb. This is all This is pre-IPO. This is just selling off shares. It doesn't have to have a ticker symbol. It's just selling ownership. And it didn't say who they were selling it to either. But if you look at Jensen Huang, we talked about the valuation that NVIDIA would have to get to for Jensen Huang to be a trillionaire. It'd have to get to 25. I thought the number we calculated out was $25 trillion market cap. That's not going to happen, even as great as NVIDIA is. So this is another feather in the Elon Musk cap here. SpaceX is still private, but they can still sell shares. So, for example, I dissolved it, but I had a full C Corp. And I issued shares of that C Corp. Even though that's a totally private company, I did too, got distributed shares that way. All right, so that was your first big piece. I'll dive into the second piece here, which was retail sales. The retail sales numbers came out today, which if you saw them, they really weren't that bad. There was a slight bump up above expectations. However, over previous months, we kind of dipped down just a hair. And you can see right here, this is the retail sales numbers, which was 0.8%. They expected to be 0.3%. We came out at 0.4%. So all in all, the retail sales numbers look okay. Nothing too dramatic there. It looked to me like a lot of the bump in car sales numbers came from bump in retail sales numbers came from vehicles, which I found interesting. We also had in that same list, some, you could see here, Empire State Manufacturing Index also showing positive, which is a good sign, right? It does look like things are getting better. If you go from a trend perspective, look at that Empire State Manufacturing Index from these lows of January of this year. We're at negative 41. Now all of a sudden we're positive 31, and it's our definition of an uptrend, right? Higher lows, higher highs, and all of a sudden it appears that things are getting much better. But the reason I bring up the retail sales numbers is there is a lot happening the next couple of weeks. Next week we have some really big names. You've got Walmart reporting earnings. You've got Lowe's reporting earnings. You've got some off the top of my head. I'm trying to think of other ones. Palo Alto Networks is coming out. Of course, we have NVIDIA reporting on Wednesday. But a lot of retail sales companies reporting. So, for those of you who are trading retailers like Nordstrom's or Macy's and Ross Stores, Burlington Coat Factories, check their, kind of how they're standing on their earnings report, not the economic report from retail sales, and see which market segments might be doing better than others, and that could clue you into success in those specific positions. Now, one thing you can do if you are looking at retail sales data is you can go to the retail sales over here at Forex Factory. You'll see like a little folder. If you click on that, it will bring up a page where you can actually go and click on the latest release from the Census Bureau. And when you do that, it'll bring you to their page. You can download and see exactly which market segments have been doing the best. Great way to kind of get a sense as to which retailers are doing better, where's the money flowing, and that may actually impact those individual stocks as we go. So that was my second point to get to today. My third one, one of the more interesting ones of the day, you had Goolsbee, one of the FOMC members, was speaking. So I thought, let's talk about his FOMC comments real quick as I grab another sip of this Jefferson's Ocean. Now, Goolsbee made a lot of comments today that were, at least from my perspective, perceived as very bullish for the economy. He mentioned 1.25% to 1.5% lower on our Fed funds rate by the end of next year, which means you're looking at 5 or 6 rate cuts of 25 basis points next year. Now, I'm going to real quickly bring up the Fed funds futures, as I always do. I know, Margaret, as I always do. And bring up this one just to kind of see what it's telling us, right? Goolsbee was saying that at the end of next year, he sees it down another 1, I think it was 1.25% to 1.5%. Well, what does that mean? Well, let's go all the way out here to December 10th of 2025. And that means that we would be down, if it's Goolsbee's number, that would be taking us down to between 3 and 3.5% down here. Notice the market is not pricing this in at all. The market is not pricing this in at all. It's basically saying there's an 11% chance we could see that many rate cuts by the end of next year. So not working, not fitting in. If you look at the median projection for the end of next year, you're looking at 29.5% chance that we're going to have 3 rate cuts between today and next December. That means we'll probably get one in December and then 2 for next year's. I have Voyage 28. Wow, we're really getting the great questions out there. Yeah, I have Voyage 28 just so we can see. Yeah, it's nice because it actually comes with a little booklet. Oh, sorry, my camera's not in autofocus anymore. That was part of the blurry problem. Yeah, it's nice. This Jefferson Ocean gives you a little booklet, tells you all about the journey, its ports of call and everything. Really, really kind of cool thing. Yeah, Jefferson's 28 Voyage. Sorry, I'm scatterbrained. It's the whiskey. It's making me scatterbrained today. Cheers to everybody. All right, let me continue on here because I think that this is very interesting. If Goolsbee is forecasting 1.25% to 1.5% by next December, and the market's only pricing in 75 basis point cuts total by next December, that tells me there's a huge separation between expectation and reality. It almost feels like Goolsbee is trying to candy coat things to make it sound a little bit rosier than it is. Again, I think it's kind of crazy for a Fed official to forecast out what they think the rates are going to be over a year out because nobody knows, right? Markets are going to change. That's what makes this all so dang exciting. Out of our IWM puts, now you can have a rally. There we go. Dude, you went long the puts there, Steve? I think you did say you were long the puts. Great. I mean, what a heck of a rally, or a heck of a sell-off, excuse me. Let's bring up that IWM chart because it was one of the bigger down movers this week. Love it. We talk about that one due for a pullback. I still think it's got bullish upside potential if the government cuts, if the Fed keeps cutting rates. But as it stands right now, nice big pullback. 4 just incredibly beautiful red candles. So let me finish up on this Fed comments piece because I wanted to show you guys kind of what my process is for this show, particularly when I have some time to do more of visuals for you. I took this comment right here from Goolsbee. This is a comment that he made. Part of the question from the Fed right now is, what's the neutral rate? And he said, if there's a disagreement of what's the neutral rate, it does make sense at some point to start slowing down how rapidly we're getting there. Neutral rate means the short end of the yield curve, like bringing that one down. And as we saw on the CME Fed Funds Futures, we're currently between 4.5 and 4.75. Some people think it's 4%, others think it's 5%. You're going to get disagreement specifically with all the voting members. But you guys know I love AI. I love Mid-Journey. It's just such a great application to have fun and be creative on and just put your ideas into and see what the software comes up with. So I took this statement as is, exactly as it was quoted from Mr. Goolsbee. And I put it into Mid-Journey and said, here you go. Imagine this. So take this statement and draw something from it. And I thought it was kind of cool the way it came out. I want to share this with you guys. What Mid-Journey does is it produces 4 images, right? And you get to choose from one of the 4. First off, I think every one of these images is really cool. They're all like really, really cool. But that image, that graphic, is how Mid-Journey perceived the statement of if there is a disagreement of what's the neutral rate, it does make sense at some point to start looking, at some point to start slowing how rapidly we're getting there. I thought this was pretty cool. I was going to use one of these for the show today, and I thought I'll just show you guys the 4 of them. I actually was going to use the bottom right-hand one here because it feels like it's walking the line, but it was kind of subtle because it's walking the line, but also there's a little bit of a cliff out there. You also have the top left one, which with the time, the watch, and kind of the waves showing the fluctuations of price. I love it. The arrows kind of conflicting and going back on each other. Just great. Love AI and how it paints pictures for me and keeps this content fun for the show. So those are your big 3 pieces. I do want to run through our markets here and look at some of the charts. I had a funny trade on today. Well, it's been on for a couple of weeks, and that was Rivian. I had some $10 puts that I'd sold on Rivian, and look where it closed out today. It was so funny. It was getting down to the last little bit. I was like, watching it go from $9.99 to $10.02 to $9.99 to $10.06. Just kept on bouncing there, but closed at $10.06 at the end of the day, which means that those puts I had sold expired worthless, which is great. It just lowers my cost average. I still am long 6,000 shares of Rivian. I would love to see a jump up on Monday morning so I can come in there and sell some of those 1150 strikes yet again and get some premium. I'm not sure if I'll do 30 days out. I'll let you know what happens on Monday, but yeah, I will probably sell some calls against my position. Probably not going to sell the $10 puts, even though the premium will be amazing. The whole EV thing, I think, is going to be a bit of a sticky situation for the coming months. So let me start at the bottom, work our way to the top. we've got that crude oil chart, which, I've been concerned that we hold this bottom, that we really need to hold this bottom here. And today, or actually, let's go back to Wednesday, we hit it and bounced off it. That was great. Today came crashing back down with a big red candle. We're right at those lows that we've seen going back into early September, actually late September. Now the focus is on these lows from early December, December 10th. And that low point on this chart is 65.27. If we start to break that, guys, I think that there could be some bigger downside moves here for crude oil. The trend says it, price says it, and the weakness in the most recent moves is also saying that. So I'm a little bit wary on what's going to happen here with crude oil. Of course, the rising dollar is not being a good friend to this one either. But that was your worst performer, down 2.45% for the day, and actually posting a pretty ugly week. Remember last week we had that really nice rally up. Well, starting on Monday here, just pretty ugly for the week. NASDAQ. We talked about how NASDAQ felt like it was holding. We go back to Wednesday, and there was a rather positive talk track coming for me. Why? But because of the way the candles were forming. And that all changed yesterday. Today, big follow through to the downside momentum, really crushing NASDAQ even lower. Down 2.47%. Is this the end? No. It's due for a pullback. No surprises there. And I think a lot of this is going to be interest rate sensitive. I think a lot of the up move was expectation sensitive. People getting a little bit so excited about how Trump may change things. Look, there's still a lot of information to be sorted out. The future, in my opinion, is still relatively uncertain with regard to what could happen, but we know the general pieces are being put in place. Now, for me, it does feel like we'll come back down and test this most recent low. If you are a person who's looking for that long-term buy point, getting down around that 20,150 level on the NASDAQ 100, that's really your spot. After that, you've kind of got this ledge that's right around 19,800. Down below that, I think it's rather troublesome for the NASDAQ and starts to see things roll over. Now remember, Wednesday, we have NVIDIA. NVIDIA really could be the problem child. It's either going to make or break the markets, right? It feels to me like more things are starting to line up for the negative for NVIDIA, even though they're dominant and everyone loves them and they're the darling stock. They got to sell their product. Now, there's a huge demand for it. We know that. Jensen Huang has said that multiple times. But some of the most recent numbers out of Google and Amazon and other companies alike have been a little bit slower than what they were before. So we'll all wait for that one. Tiger, I'll get to that. As soon as I finish the updates, I'll talk about what I think about those types of services you were asking about. Yeah. I'm not a huge fan of prop firms, but I'll tell you about it. All right, moving up our list, Russell 2000. Nice 4-day sell-off for the Russell, 1.53% slide. But for the week, actually, we'll not do the whole week. I'll just do from Tuesday on, down 5.47. Again, I still think that there's a good amount of room till it get down towards the origin of this move, right at 2,215. That's what we talked about the other day. So, all right. Even if it gets down to that lower red line that you see on your screen, right, this one up here at 2,214, it's still in an uptrend, still looking rather positive. So all in all, the uptrend in the Russell is still good. I just think we got a little ahead of ourselves, got a little emotional, and now we're seeing a little bit of a retracement. Fine, it's due. Moving up even more, S&P. Let me get that out of there. I had drawn this line in the other day talking about S&P coming back down towards that demand zone as well, the origin of this move, which is right around 5,740. That would have been a 4% sell-off from yesterday. Well, we got 1.37 of it today. At this rate, depending on what happens on Wednesday with NVIDIA, we could easily hit that target. So just keep that in mind. I do think there's going to be a little bit more profit taking next week because it was a glorious, week rally a couple weeks ago after that election. Moving on to gold. GC. You had gold down on the day, 0.11%. I did not sell puts on gold. I really wanted to. I'm just being a little cautious just because of NVIDIA reporting next week. One thing to keep a note of here, I did draw up this demand zone, which it did pierce through it, and it's actually below it now. So I'm going to just move this off to the side. Actually, I'll get rid of it. What I still am interested in is the hammer formation that happened after this big sell-off in price on gold futures. So you can tell we were way up here, right around 2,800. Now all of a sudden we hit this low point, which is 2,541. The top of yesterday's candle, 2,585 is that number. I still look at that as a pretty good buy point, right? So if you're not buying in the demand zone or buying on the sell-off itself, what you want to do is you want to wait for stock, price to kind of move back up and show some strength. Well, to me, if it gets above that level, 2,585, that's your buy point on gold going forward. So it could be a pretty interesting one. The other piece I'd want to add in here, just to see if this was a really good buy point, would be climactic volume. We didn't get that, right? You have high volume, but nothing that's climactic on yesterday's trading session. So I'm looking at gold as a potential buy here if we get a rally above those levels. Didn't make the podium, though, either way. Podium time, though, reserved for the dollar. And fortunately for most people here, a pause. Yesterday, our high point on the dollar was 107.06. So still staying in those 50-cent jumps per day. Today sold off a little bit, right? All in all, for the day, you were down 19 cents for the dollar index, down 0.18%. It even started up a little bit higher and slowly starting to drift lower. So about time for a pause. It would not surprise me at all to see it go lower, right? A little bit of a pullback here, a reprieve, and then continue on up. The bigger picture, though, you look at this. This is what I find very, very interesting, because we really have not had any, highs above where we are at past October of 2023. After that, there's a lot of blue sky, a lot of field to be made up here to the upside for that dollar index. So keep that in mind. Keep your eye on it. Again, if we break these highs that we established back on early October, which are highs right around 107.03, 107.24, you break that, I think you got all of a sudden new buying coming in and leg to the upside. Pretty good moves. That's bronze metal. Silver metal is your 10-year. Now, the 10-year actually it's changed just a little bit. It's barely up on the day. Now, we did have kind of longer legs on this one. We did break above that 4.47 mark. Today, our intraday high was 4.5. It hit that and abruptly came right back down. So fairly unchanged on the day in the face of all this other negativity. And then the big day. And by the way, next week we do have multiple pieces of real estate data coming out. We do have existing home sales. You've got the National Real Estate Board's numbers coming out. And also there's one other one I can't remember off the top of my head. But you have three kind of housing pieces of data next week. And then we get Bitcoin. Bitcoin right now on another run. Right, it looked a little bit weaker yesterday. People were like, oh no, here we go. We were at 94,000. We fell all the way down to 87. And now we're back at 92,000, up 4.62% on the day. I am going to cheers all of you here with the expectation of a good weekend. And let's see if we can get above that 95,000 mark by Monday. Come on, Bitcoin. Do me well. Do me well. And also for everybody, I'm putting together a video for bar chart. I should have that one finished this weekend, and then hopefully they will publish that one soon. But it's kind of the continuation of the video I did last time. Remember, a year and a half ago, I did a video for them, really kind of outlining why I think 250 is my target for November of next year. And we'll see if this one changes at all and deviates from that path. That's right, Big Gab. Looking at them Bitcoin holdings and loving it, right? So that's our broader markets. I've got my trades kind of mapped out. Jumped out of the SMCI. Unfortunately, that was my only loser on the week, so I'm okay with that. I'm okay with that for sure. It was a small loss in the face of it. Could have been a much, much worse situation. Soul says, what's your favorite whiskey? I don't know if I really have a favorite. It all depends on the mood. I wouldn't say I would call myself like this super connoisseur. I like Eagle Rare. I like Michter's bourbon, typically bourbons. But I don't, for those of you who watch the show, you may think that, man, Merlin's just a boozer. I'm not, guys. I only drink whiskey like neat or on the rocks for this show. This weekend, tonight, obviously, I'm going to go and hang out with some friends and watch the Tyson fight and probably go have a couple of cocktails after that. But I'm really not a big drinker, even though I have one of the most robust whiskey collections you've ever seen for an individual. John says, did I sell puts on Boeing? Nope, I did not. I brought it up today. It's funny because it started moving up and I was like, oh man, I might have missed my opportunity here. I don't know. I guess I'm being extremely cautious right now. You can see today was up 1.48%. That breakdown below that 140 mark had me thinking, well, where the heck's it going to go? What levels might this run into on Boeing? So I'll do a weekly here so we can look at the levels a little better. That was the main one. The question now in my mind was, does it get down to 120? All right, that's a pretty ugly weekly candle. Even though it did an about face today, up 1.48%, still not still not that confident in it. You hear the proverbial, don't catch the falling knife. Well, I think many of you would agree that at this point, Boeing is a falling knife. I mean, this is an ugly trend. Where's Michael? You guys know we have the guy Michael comes in every now and then. He always comes in late during the show. I think he's international. He always comes in late, and he's always telling me, hey, what do you think about this stock? The charts always look like this, like straight down. You just want to like bite your finger like, oh, damn, why would you buy that? Well, this is that similar situation. The piece that separates Boeing from the Michael stocks is this is one of the bigger companies in the U.S. I mean, it's a monstrous one, but I don't know, man. I'm torn. I'm going back and forth, John. I really am. I really am struggling with the Boeing trade. I want to sell puts on Boeing. I'd love to buy it lower. I like the 140 price, but that trend is just so bad. I mean, this trend is hideous. And that last earnings, I cannot get past that in my head. It's like I almost feel like I need to wait till the next earnings to see if this is in fact a trend or a one-off of write-downs. But man, losing $10 per share, that's a recipe for bankruptcy, right? I mean, may as well call yourself the U.S. government. Oh wait, they do a lot of government work. Convenient. Yeah, right. He does make the show interesting. It's always fun, And I didn't mean to pick on Michael. I think it's great because when you look at what we do, right? Everybody in this room right now is making informed decisions, or I think informed decisions about what they would like to buy or sell, right? And I'm not here to sway anybody. I'm hopefully just giving you what I think about certain situations. As you know, I'm totally fine being wrong, because when I'm wrong, I'm not going to lose a lot. And I'm wrong a lot. It's fine. I've come to grips with being wrong a lot. I just know I'm not going to lose a lot. Yet sometimes you wonder what other people are thinking, and you scratch your head going, what are you thinking buying that? And Michael is definitely an interesting one, because Michael, he's always looking for something that's beaten down, like aggressively beaten down, and looking for the value in it, and looking at financials and fundamentals. And a lot of times the price chart to me leads the fundamentals. And when I have something that's like on a 45-degree down slope, and it's just like, it looks like a ski mountain going down, I don't care what the financials are. Unless it's a great company that I'm pretty sure is never going to go away, like Boeing, right? Not necessarily in the same category, but you guys might remember CrowdStrike. Remember when CrowdStrike had they updated their software, and all of a sudden everything crashed on CrowdStrike, and Delta's suing them? Look at CrowdStrike now. This is a huge, stable company that had a mistake. I mean, this was a great trade for me, buying things that were undervalued, exceptionally undervalued, heavily oversold off of fear. I love stuff like this, which, hey, I'd love to see NVIDIA take a big nosedive next week so I could buy in, because I'm not in NVIDIA right now. Would love it. This is the part of the show I love. Equity analysis and chart analysis. Good. I do too. It's fun, And I think for you, I think for all of you, it's probably a little bit different, because you may have your way of doing things, and your way may be better than mine, right? I'm not here to say I'm the best at anything. I'm just a guy who trades with regularity. So maybe you learn something along the way, maybe incorporate something or approach that I look at the markets with. But bottom line is we're all here to share information, collaborate, and hopefully make some money out of this dang thing and improve our financial situations. So yeah, CrowdStrike was a good. What was another? So Nike was another one. I mean, you look at a lot of these companies that have had really bad situations, man, and they've all seemed to recover. Remember Anheuser-Busch? I just love the Anheuser-Busch right now. It's come crashing back down now. But back here, we were looking at it when they had their that big problem in 2023 with the wrong spokesman, and they did, not wrong spokesman, but they took a chance, and that backfired on them. All these people protesting. Look, but Anheuser-Busch went from $52 all the way up to $68. Great. Remember the financial crisis with JP Morgan, and we looked out there and we said, hey, which companies are probably not as impacted by this situation? Well, I can't remember exactly when that article was written. I want to say it was 2022. JP Morgan's gone from 104 to 240. Bank of America, similar situation. They're not going to disappear. Right now, they continue down a little bit further, but there was some bounces along the way. We talked about SCHW. All right, Charles Schwab, nice bounces as well. Now, it did have some weakness. However, it got back on track. So it's really about At least if you're a long-term holder, right? If you're kind of that Larry Jacobson approach, the Warren Buffett style, which is I'm taking companies I know are legit, solid, not some fly-by-night thing I've never heard of who, is getting pumped up by a bunch of influencers on social media, but real companies. Again, Nike, Boeing, God, the list is long. I mean, long list. Anyway, I'm on a whiskey rant. Sorry about that. WBA. And some of them, and this is the same picture as Boeing right now, right? They look almost identical. Walgreens Boots Alliance is nowhere near the company that Boeing is, and looks like, as John O'Donnell would say, this looks like a bug in search of a windshield, right? It's just fallen. There was another interesting one that I got wrong. What was that? Oh, that was Hood, which I think, Margaret, you actually bought into Robinhood, and look what Robinhood has done. Right back here when I was talking about, it's like, nope, this thing's not looking good at all. They're selling order flow. They got a bad business model. Then they started doing crypto, and crypto all of a sudden started to become much better. They bought an exchange for crypto, so now they handle everything internally. They're keeping all the, I'd say, front running of order flow on their crypto trades, and now all of a sudden, Robinhood back on track. I wouldn't have called that one. We did say that they were probably going to get bought out, which did not happen. So, yeah, WBA most likely will go out of business. What'll happen probably with Walgreens Boots Alliance is it'll probably get sold. It has book value, right? There's value to that company. They have, stores all over the world. So there's value there. It's just a question of what is it, right? At what point does a company come in and buy them, right? Does Amazon come in and buy Walgreens Boots Alliance and now use that as its Amazon pharmacies? That type of stuff could absolutely happen. I mean, look, stranger things have happened. Amazon bought Whole Foods. Who thought that was a good idea? Well, it's working. So at a certain point, there's a value for these companies. Absolutely. Thomasina, cheers. Have a great weekend. I think I might wrap up here soon as well. You guys got any last minute things you want me to talk about? I wonder about Warren's choice on pool. Pool. Oops. I don't know about that one. I don't know Warren's thoughts on pool. There's the chart there, but I'm not sure. Not sure about that one, Aller. Amazon buying Walgreens Boots Alliance is a great idea. It would make sense, didn't it? I mean, because Amazon now is talking about doing pharmacy stuff. So if you now have a storefront that's all over the world, you can buy all these locations instantly. And not only do you get to buy the location and get the pharmacies built in a way to distribute your new drug products, but then you now have a retail store, which gives you more returns. You can actually carry inventory there, and you can stock the shelves in the store with Amazon products. So you're kind of win-win there with the Walgreens Boots Alliance. It's just a question of what's the right price? Is the next big market catalyst on Wednesday? I think so, Margaret. I'm looking at Wednesday as the day, right? They're obviously, let's go NVDA. Obviously, you've got Walmart, you've got Lowe's, you've got a couple big names reporting next week, which may be impactful, but I don't think any of them will compare to what NVIDIA is going to be. Remember, what's driving this market up? It's not retail. It's not Macy's or Walmart or Target. It's not necessarily energy, although energy I think would argue is a bigger play than retailer. It's tech. I mean, when we look at the charts here, we could go through our list of ETFs, and you look at utilities. Okay, that's been a great move up. Finally, that incredible uptrend is broken. Financials have been incredibly strong. So yes, financials I would say are probably leading the charge. You look at energy. Energy's been great, but we look at XLK, barring today's activity, it's had a huge move off the bottom. And the reason tech is more influential is when you break apart the indexes and you see the weightings. That's why NVIDIA is so important. You could make the argument that Walmart is as significant as NVIDIA, right? As a company, as an economic producer. You could make that argument. However, you got to look back at what NVIDIA is doing. It's fueling tech, which is the biggest components in the NASDAQ. It's the biggest components in the S&P. And I don't know, let me check on the Dow here what the biggest component is. I think I know. I think it's going to be Apple or Microsoft. But let me go to NASDAQ 100. just so we can get a peek as to what those weightings are. So Slick Charts is where I like to go for that. You go to Slick Charts and NASDAQ. Look, this you don't see anything other than tech here. So I'm going to just do the numbers real quick in the head. You've got 8, 16, 23, 28, 32, 30. I mean, you're looking at 40% until you get down to Costco. Almost 40% of the NASDAQ is tech companies, and then there's Costco. You look at the S&P 500. Number 1, NVIDIA. It's the heaviest component of the S&P 500. Number 2, Apple. Number 3, Microsoft. Number 4, Amazon. Number 5, Meta. Number 6, Alphabet. Number 7, Tesla. These are all tech firms, so I don't care how big Walmart is. I'll look at the S&P 500. Walmart is number 20 on that list at 0.73. So even if they melt down and just have a horrible earnings or a monstrous blowout, is Walmart going to have a huge impact on the S&P? The answer is probably not. But if NVIDIA has a huge blowout up or down, massive impact just because of its weighted percentage. Now, what about the Dow? Go to the Dow. No, I was wrong. I thought Microsoft would be, or Apple would be near the high. So here's where the difference occurs. You look at the weighting in the portfolio for the Dow Jones Industrial Average. Number 1 on this is UNH, United Health Group. Interesting. Number 2, Goldman Sachs. Number 3, Microsoft. So this is a much, I hate to say it. This pains me to say it. It hurts me so bad to say this, I need to have another sip of Jefferson's Ocean. The Dow is probably a better index to look at to get away from the tech influence. Oh gosh, it was brutal to say. You know, I hate on the Dow because it's only 30 companies. But look at the top 10, right? You got healthcare, financials, tech, retail, industrials, tech, financials, I don't know, fast food and drugs. This is, yeah, it's price weighted, definitely price weighted. But just visually, it's a much better representation of the overall market. When I look at the S&P and just look at those companies, tech, the top 7 are all tech. And that top 7 is like 20+%, almost 30% of the index. That's not right. Too much weight. So with NVIDIA reporting, you can expect to see some monstrous volatility in the NASDAQ and the S&P after market close on Wednesday. Will the Dow have as big of fluctuations? Probably not. Because United Health Group, is NVIDIA going to impact them that much? Not necessarily. Not immediately. Maybe down the road with AI and things like that. Great question. Right, Steve? I saw Sherwin-Williams is number 5 in the Dow. Like, really? That's a paint company. I hate their slogan. I really don't like their slogan. I think it's bad. I don't know if you guys have seen it. The Sherwin-Williams slogan is, I think it says paint the world, and it shows the world just covered in paint. I'm like, no, that actually would kill the world. Let's not paint the world. I get what you're saying, but don't paint the world, graffiti artist. Are the Dow Jones still only industrials? No, I don't think so. I mean, you tell me. If I go here and go to the Dow and look at that list, would you call these industrials? I don't think that that's at all industrials. The only one that's really there is industrials. I mean, Caterpillar, but Microsoft's not industrials. Goldman Sachs is not. I mean, Goldman Sachs is financials, man. United Health Group, pretty clear. So yeah, I don't think it's industrial average anymore. It's definitely morphed over time. Yeah, cover the earth. That's what it is. Not paint the earth. Cover the earth, right, Mark? I don't know, man. I didn't like that. I was like, hey, I'm all for paint, but let's not cover the earth. I know that would be environmentally unkind. Their paint is slimy. I'm a contractor. I love it, Steve. I love when I get someone who can comment on the quality of paints. Like, oh, I'm definitely going to go with Valspar because Sherwin-Williams is garbage. All right. But they're all American companies because we're a great country. These ones are, at least, let me see, is everything on the Dow an American company? I don't know if that's necessarily true. I'm going to go through here. Yes. Everything here is a U.S.-based company. All right. Cool stuff. Oh, by the way, Disney. I had this on my radar today. I did not make a trade on it because it didn't hit my plan. Remember I talked about Disney being a shooting star today? And I was like, hey, If this breaks down below 108.40, you got a short opportunity. Not only did it not break, it kept on rallying. All right, Tiger. Tiger Berry sent in a question, wanted to know more about this one. And it was about prop shops. So I am not a fan of prop shops, and I may be biased, probably because, I did it all myself, and I look at when you use a trading company like a prop firm. By the way, let me take a step back and explain what a prop firm is. So a prop firm is a company that will give you money to trade with. You have to come in with a certain amount of money. Typically what you have to do is you have to pay for some extent of education. So like, okay, you got to take our course, which is like, $2,000 or $3,000 or whatever. Then once you finish that, they will, you come in with a little bit of money, let's say, $5,000, and they'll say, okay, you can trade up to $50,000 now. But you have to follow these rules. You have to meet all these different, they give you some tests. You have to meet all the requirements and pass the tests. And if you pass those tests, you get access to capital. Now, depending on which firm it is and how they're structured, typically you get a percentage of what you've earned. So let's say you made $10,000 for the day, you might get to keep, 6 of that, 7, maybe less. My feeling is, why do you need them? And I understand for certain situations, a lot of people don't have large accounts to start with, right? So you're starting off with a couple $1,000s. It's really small. I get that. And maybe there is some justification for going to a prop firm for that, because you get some training, you get that discipline hammered into you, because if you don't follow the rules, you get kicked out, just like the turtles. I like that side of things. I like the discipline side. But once you get to a certain number, a certain amount of money that you're making, why would you ever want to give someone a percentage of your winnings? I look at my rate of return at the end of the year, or just flat out profits, and I go, man, how different would it be if I had to give away 30% of that or 50% of those profits that I made? I really didn't make that much money. I gave away half of it. So I'm okay, I guess, if you use a prop firm as a crutch in your early days to get going, to get started, if you don't have a lot of capital. I definitely would do my research. I don't know the firms. I think Top Step. So we had a couple guests on the program that have used prop firms. And Jerry Baldwin, I think he uses Top Step Trader. I've heard good things about Top Step, but in my mind, I would never use one. I would rather just scrape together the money and do it myself. But I also was surrounded by a community of traders that would help me out. I think it's very different today because you don't necessarily get those resources, those people to help you out. Now, Tiger, you're also, if I remember correctly, you're a Trading Academy graduate. So I think, personally, that you could be doing much better by yourself. But maybe that entails going into your XLTs, right? Going into a mastermind if you have mastermind as well, and becoming a fixture in those rooms, right? Your trading day, you're going to be in those rooms, and you're going to be looking at what other people are looking at. Maybe you see some good trading ideas. Maybe you share your trading ideas and strategies, and that community can help fix your problems if you have some, or build on your strengths. And since you've already paid for those resources, I definitely think you should use those before you go into a prop firm. Now, as far as getting money, that's obviously the big challenge, is how do I get more capital to trade with? If that's the biggest concern and you have no way to get more capital, then okay, a prop firm may be the way to go. But as soon as you can, I would say get away from the prop firm, right? There's no way I'd want to continue to let them take a chunk of my profits, even though I might be able to trade more and more and more. I'd rather keep 100% of my gains and be responsible for 100% of my losses. At a prop firm, you get to keep a percentage of your gains and you're responsible for all your losses. So, you're actually, in a sense, you're stacking the odds against you, right? Because you don't get to keep all the winnings. Your 3-to-1 reward to risk ratio diminishes because some of those rewards are going away. Let's see. Says my kids were trading with a prop firm because they have no money, and it was a good way for them to learn how to trade. Cool. Sometimes it's just a lack of capital, like my kids, right? Man, I like Steve. He's playing hardball. He's like, I'm not giving you money to join a prop firm. Love it. Luca, I got funded on Apex for a while now. Okay. So there's a few out there. Again, Tiger, I am not the person to ask with regards to prop firms. I already go in with a negative opinion, right? Because I just think they're trying to make money off of you. Now, granted, it could be a symbiotic relationship. You could end up being a very consistent, great trader, and now you're access to, let's say, $1 million account that you wouldn't normally have access to. Therefore, you might be making more money and keeping less of it, as opposed to making just a little bit of money and keeping all of it. So definitely one of the benefits of these prop firms. What? How many? I'm just curious. You don't have to participate if you don't want to. I was going to wrap up, but how many of you are using prop firms? And would you recommend yours? Right. This is again, helping out a Tiger here who is looking for a prop firm. Have you used one? If you do, did you like it? And would you recommend it? Just kind of curious, maybe to help out. Thanks, Daniel. Yeah, a big shout out to Michael. Again, I'm going to take him out to a nice dinner this weekend. Michael, my good friend's a photographer, and he came over and I don't know what he did, but he changed a bunch of settings. It's on manual focus, so now when I move, forward or backwards, it gets blurry. It's like my hand will get blurry. It used to autofocus, and I think part of the problem with this camera was autofocusing. We adjusted the lights, we did this, so. It's funny because in a sense, I guess I actually did use a prop firm. Like when I started day trading, the floor gave me unlimited margin. So if I wanted to, I had a $30,000 account when I first started, and if I wanted to trade, $5 million, they would just let me borrow the money. So it kind of was a prop firm, but that's scary stuff. That's my thought, is build up capital that way in order to fund my account. Yeah, I would do it. But, Tiger, man, you've already spent money to take Trading Academy classes. Get back in there. We've got some really good people in those rooms. Granted, you won't have the capital, right? That's something that we don't provide. We're not a capital provider, but we can help you get the consistency up and start to build that account. Let's see. Trade my own cash, but my kids like theirs. Who did they use, Steve? Do you remember who they used? They could trade up to 27 contracts on a product. That's crazy. Yeah. Using other people's money is always a good thing, Keith. It's using other people's money is fine, but your discipline had better be better than with your own money. Because remember, you're borrowing money from people that will not lose under any circumstance. So if you lose all your money and then some, you better find a way to pay these people, right? I've seen it happen. Apex, okay. So Apex, Top Step Trading. There's a few big names out there. T3 is another one. T3 Capital. By the Rip says, I'm on Apex, early MI trading, and still on a test account. Do you like it? By the dip? By the drip. I'm using Apex, just started, still on evaluation. Okay, cool. So you got quite a few people are using Apex. Interesting. All right. Let us know. Maybe we can give Tiger some updates along the way. I appreciate the question, Tiger. Sorry, I actually wanted to do a table comparison of all the different prop firms, but since you brought it up today, I didn't have time to get that all prepared for you. But I'd say fine if you can't get the capital and that's important. Then find a prop firm that works. It looks like a lot of people are using Apex. Again, Top Step Trader, T3 as well. But, look, what I would do is I would line up Apex, Top Step, T3, and maybe a couple others and make a spreadsheet, right? Make a spreadsheet of all of them and say, what's the buy-in, right? Is there an educational buy-in? What are the requirements? What tests do I have to pass? What sort of qualification do I need? What percentage do I get to keep? And then also, what are the fees? Are there commissions? Are there transaction fees? Are there monthly fees? And then make that table, and ultimately you can go back through and find out which one might be the best alternative for you. I'm sure that someone's already done that online. I'm not going to do that one for you, but there you go. Cool. Eddie says, once I build capital, I'll probably stop using it and trade my own money. Good. I think that's what we should all do. I bought them an account. It was like $19 for a $250. Wow. That's great. $19 get $250K. Why not just a margin account? Because sometimes, Daniel, if you have say $1,000, even if you have a margin account at 4-to-1, you have $4,000. You can't do much with $4,000. You can't even really you can't even take an S&P contract home overnight. Now you could do if you had $4,000, you could probably do 8 contracts intraday, right? As a day trader. And that's typically what a lot of the rules are, is you got to be out by the end of the day. But each one of these prop firms will have different rules set up. All right. I got to wrap up. So that's going to do it for me, everybody. Cheers. I literally finished the glass. I'm going to go take the dogs for a walk, and then I'm going to go watch the Mike Tyson fight. I'm optimistic that Mike Tyson, a 58-year-old man, is going to level this 28-year-old kid, 27-year-old kid. I really hope it does happen. Anyway, I know, Steve, I know an S&P is 11, but that's overnight. Intraday, you can get a lot less than that. You can get $500 margins for intraday on most platforms. Not most, but a lot of platforms out there. All right, cheers, everybody. Have a fantastic weekend. Hope you do something fun. I will see you all on Monday. I think our Monday and Tuesday is going to be somewhat muted in anticipation of what's going to happen on Wednesday with the NVIDIA earnings, but Been a great week. I hope you all enjoyed it. I hope you made some money. I know the crypto guys did really well. Hopefully some of these other markets are paying you out as well. So take care. Have a fantastic weekend. If you want me to discuss anything next week, email me, tradermerlin@gmail.com, or put them down below into the YouTube videos. I will see you guys next week. Take care, everybody.